again and welcome back to another session of Commerce class with me, Suman Rathore. Students, debenture is another way of raising finance for a company. And in simple words, it is an acknowledgement of debt. Actually, debenture is a document or a certificate issued by a company that it has borrowed a certain amount which has to be repaid on a certain date with interest. Holders of debentures are called debenture holders, who are actually the creditors of the company. As such, they don't have any right to participate in the management of the company. Generally, debentures are secured against the mortgage of fixed assets, which means that in future, if the company is unable to repay the principal amount or the interest, in that case, debenture holders can sell off the fixed assets to recover their claims. Still, debentures are considered as one of the most popular source of raising finance due to the various merits attached to them. First is fixed rate of interest. Debentures provide long-term funds for the company with a fixed obligation called interest at a fixed rate, which is lower than the rate of unsecured borrowings. As it is fixed, so company knows the amount of its obligation towards debenture holder very well without any fluctuations or further calculations. As such, there is no burden on company's earning. Next is no interference in management. Debentures do not carry voting rights. Therefore, a company can raise funds without diluting or weakening the control of existing members. The control of equity shareholders remains unchanged and debenture holders cannot interfere in the management of the company. Next is economical source of finance. A company can raise funds through debentures at a relatively low cost. This is because investors consider debentures a safe investment. Debentures can be sold more easily than shares, and various expenses of issue like underwriting commission, brokerage and other such expenses are way lesser than that of shares in case of debentures. Next is benefits of trading on equity. Interest on debentures is paid at a fixed rate. After payment of interest, the remaining profits are available to shareholders. When the earnings of the company increase, the rate of dividend on equity shares can be increased. This is known as trading on equity. Now, with the increase in earnings of the company, equity shareholders' dividend also increase, but the interest on debentures is paid at a fixed rate. As such, it maximizes return on equity. Next is flexibility to capital structure. A company can repay the funds raised through debentures when it does not require the funds anymore. The facility of redemption avoids the danger of overcapitalization and keeps the financial structure flexible. As such, funds are available for a fairly long period and can be repaid out of earnings of the company. Despite all these merits or advantages, debentures suffers from various disadvantages also. Like first is permanent burden of interest. As fixed rate of interest is to be paid on debentures every year, it puts permanent burden on the earnings of the company, especially in case of low earnings or depression. Moreover, principal amount is also to be repaid after certain years. As such, debentures are considered as burden after some time. Next is charge on assets. Debentures usually involve mortgage of fixed assets. A company cannot raise funds easily through debentures unless it has enough fixed assets. And during periods of depression, the company may not be able to repay the amount. As such, fixed assets of the company are always at risk, and so the future of the company. Moreover, if the company is unable to pay the interest on principal, debenture holders can sell its assets to recover their amount. Next is reduction in credit standing. A company with its capital structure loaded with debentures is not viewed favorably by the lenders. As such, the creditworthiness of a company which has issued a large amount of debentures is low. Issue of debentures restrict the capacity of company to borrow more funds, and borrowings from banks and financial institutions becomes difficult for such companies. Next is reduction in dividends. During times of low earnings, very little profit might be left after payment of interest on debentures because it is a fixed obligation. The company may not be able to pay enough dividends and the market value of its shares may go down. So now we can say that debentures are the creditorship securities, as debenture holders becomes the creditors of the company. As such, the businessman has to analyze the various sources of finance available in the market before deciding on any particular source of finance. That's all for today. Thanks for staying in tune and don't forget to like and subscribe my channel. Thank you and goodbye for now.